Hello and welcome to The Deduction, a Tax Foundation podcast. I'm your host, Kyle Hulehan, and today we are joined by my co-host, Erica York, and the one and only Daniel Bunn, President and CEO here at Tax Foundation. Daniel, how are you doing today?
I'm doing well, Kyle. How are you?
I'm good. It's great to be here. I'm excited to start the year off, and of course, we have Erica here. If you wanna set us up today, Erica, you're running with that.
Yeah, so we're really excited to have Daniel on today to talk about what's possible in 2025. And of course, this is being called the year of the Super Bowl of tax Armageddon. I don't really know what the right name is for when several trillion dollars of tax cuts are scheduled to expire. And if Congress does nothing, 62% of taxpayers will see tax hikes. So that's why we have Daniel on to talk about this with us. And Daniel, can you just start us off by what needs to happen at the very basics with tax policy this year?
Thanks, Erica. Yeah, it's going to be a big year. Congress has, in some ways, a very complicated task, and in some ways, something very simple that they could do. So the reason that we're talking about this being a big year of tax policy is that in 2017, when Congress lowered tax rates across the board and adopted some new business provisions, including reducing the corporate tax rate, a lot of that policy was set to expire. On the individual side, all the rate changes, the changes to the child tax credit, changes to the standard deduction, all of those things will expire at the end of this year. And if Congress does nothing, then tax rates will go up for millions of Americans facing higher tax bills and on the scale of an additional rent or mortgage payment. So what Congress could do is they could look at the tax code as it is, and they could go in and change a bunch of dates in the tax code and say, well, this is not going to expire anymore. We're going to avoid a tax hike. And that is kind of like the minimal level of success this year is just trying to avoid a tax hike for millions of Americans. But certainly that's not the only thing they could do. And hopefully they will work through a much better and broader approach to tax policy this year, because there's more than just, the expiring tax cuts that they should pay attention to. There's our kind of fiscal situation overall with our large debt, high deficits. But I'll leave it there for the moment. They could just make it simple and just change some dates in the tax code.
I mean, we like simple here, but I don't know if that's everything that we want exactly. But I want to put on my optimistic hat here real quick, and I want you to walk us through what could be the best case scenario in 2025 for the Super Bowl of taxes.
Sure. So when we think about tax policy, we certainly want tax policy to align with our principles, to be simple, neutral, transparent, and stable. An expiring tax cut or expiring tax bill certainly does not create stability. And there's a lot of other pieces to the tax code that don't fit with our principles. So we would love for Congress to align more of tax policy to those principles, and to do it in a fiscally responsible and pro-growth way. Now, fiscally responsible means different things to different people, but one of the things that we've done at Tax Foundation over the years is we've looked at ways to combine both fiscal responsibility and pro-growth policy so that you can avoid adding to the debt or increasing annual deficits while also increasing the growth you can get out of the tax code by making sure incentives for investment or incentives to work or save are better aligned, and that you get rid of some of the complexity in the tax code. So what you could get optimistically is a better tax code that raises sufficient revenue. And one of the things that we don't work on at Tax Foundation, but I think is part of the conversation here, you could have policymakers looking at spending reductions that also help the fiscal situation overall. So optimistically, Republicans and even maybe there's an opportunity for bipartisanship in this optimistic scenario. They could work together to create a more fiscally sustainable, principled, pro-growth tax code before these impending tax hikes at the end of the year.
Real quick, before we get too far away from this, earlier you had said there was something like it could cost like it's rent or a mortgage payment. That's kind of like a range. Could you maybe just explain that a little bit more or express that a little bit more? Because I think that's really important. Is this is going to affect real people's lives. There's like people's lives will change, money in their pockets will leave. That's kind of the numbers that we have on that.
So let's think about the way the tax code impacts different people. So when policymakers change tax rates, that reduces the amount that gets taken out of your paycheck and withholding. It can impact the amount of tax credits that you're eligible for, if you're eligible for the child tax credit or other different provisions in the tax code. And when these tax cuts that were adopted in 2017 expire, a lot of those benefits or reductions in tax rates will go away. And we've estimated that on average, you're going to get somewhere between $2,000 and $2,500 in additional tax bill for folks around the country. Now, it's kind of hard to really say for every situation this is going to be a net tax hike or a massive bill, but we've been able to look at this kind of across the country, look at the different geographies, different types of taxpayers, and look at this as an on average increase in the tax bill. Erica, you may want to add to that.
No, I think that's right. I mean, it depends on your income level. It depends on what provisions you personally qualify for. But it's safe to say on average, taxes are going up. And we've quantified that like roughly around the size of an additional mortgage payment.
That's a lot of money. That scares me.
Yeah, and it should be concerning. And for even for the optimistic scenario or the kind of minimum effort kind of scenario, policymakers should be concerned about inaction leading to a significant tax hike, especially after all of the costs that have been borne through this inflation episode and the different pressures that hit family pocketbooks.
So I'm going to take a turn to wear the pessimist hat, Daniel. And let's say that principled policy does not drive the debate. And instead, we're in a situation where maybe procedural maneuvers around reconciliation and political considerations and bargaining, given really tight margins in the House, let's say that drives the day. What's the worst outcome here?
Yeah, so like the absolute worst outcome, I think, in both political terms, policy terms, because a lot of things that were adopted in 2017 were good for the tax code. I think the worst outcome is that Congress does nothing. And Americans wake up January 1, 2026 with a tax code that is absolutely worse off from the perspective of our principles, from the perspective of what's good for growth and all of those things. You could get a scenario where Congress does something to avoid the tax hike, where you're still getting something that's on net worse than what we have currently. And that's where a lot of the negotiations are kind of ongoing right now. There are some provisions from 2017 that were particularly controversial, where folks, especially in higher tax states, are looking at things like the state and local tax deduction and saying, well, there's a cap on this deduction of $10,000 that was adopted in the Tax Cuts and Jobs Act. We want that cap lifted, or we want it to go away completely. And that would actually move policy in a worse direction. A lot of times what we're trying to do is broaden the base and lower the rates. And that was one of the trade-offs in 2017, to broaden the tax base in this way in order to lower tax rates. So you could end up with things like that being a net negative for the tax code. There are certainly other things that I know you and Kyle have talked about on the podcast with the treatment of tips or overtime, that if some of those get added to the tax code, you end up with something more complex and less useful for actually raising revenue. And in addition to that, like one big question here is what role tariffs and other kind of trade-related revenue sources could be utilized to kind of move this through the process. Like I said earlier, fiscally sustainable is a good thing, but utilizing something like tariffs as a revenue raiser to get closer to fiscally sustainable would be a net negative from my perspective.
It's always about tariffs at the end of the day. Like on this podcast, we just never quite get away from it. That and full expensing. That's kind of like the Tax Foundation brand right now. But to move on, so what should lawmakers do to avoid, that disaster situation and get us closer to success, in your opinion?
Yeah, so this is really about priorities. So one of the things that I learned, very early on when I worked on Capitol Hill is that there's three things that help anything move from being an idea to something that gets signed into law. You have to pay attention to politics. Eventually, people who respond to voters are going to have to vote for this thing, and politicians are politicians. They respond to incentives, just like anybody else does. But their incentives are to be like win votes, and have a popular message for their voters and something that's attractive to their voters. So that's the politics side. There's also process, and process here can be real complicated because there are certain budget procedures that uh, make it difficult to really do quite the scope of legislation that maybe some of these elected members of Congress might want to do, and it kind of narrows the landscape. In tax, there's a lot of things in tax you can do through this budget process, but you have to pay attention to the process. And one of the things about the process is that if you follow these budget procedural rules, known as budget reconciliation, then you're able to get legislation through the Senate with just a simple majority, rather than having to work through the filibuster and having 60 plus votes to get legislation through the Senate. So there's the politics, there's the procedure, but then there's the policy. And that's where we as Tax Foundation really invest basically all of our time, working on policy that meets what we think the needs for growth, or for the right level of revenue, or things of that nature. And a lot of times when you have a situation like we're looking at with a Congress with a very thin Republican majority, there's going to be much more time invested in the process, or much more time invested in the politics and the negotiation, and you leave policy to suffer. So I would hope that instead of moving to, kind of this pessimistic scenario and closer to the optimistic scenario, you would have policymakers saying, well, oh, actually, yes, we're political creatures. Yes, there's a process, but we are going to invest a lot of time in making sure that we get the policy right, and that we're avoiding negative impacts for investment, for saving, and for working families. And that is where I think we need to see more work done. Of course, there's going to be a lot of work over the course of the year with the budget, with the actual legislation, and things of that nature. So it's possible that what we're seeing right now, with a focus on the politics and a little bit on the procedure, eventually we'll see more investment in the policy work. But I think that is where you could lean more into getting closer to that optimistic scenario, having lawmakers sit down and look at the priorities and be able to say, hey, this policy would add more bang for the buck. This other policy creates a drag on growth or adds complexity to the tax code, and really prioritizing those things that improve the tax code rather than just meet the process or political needs.
The three Ps. I love it. So given the three Ps and the balancing act that lawmakers have to do, and hopefully we land closer to the optimistic scenario than the pessimistic scenario. What would you say is like one policy outcome that you really hope to see at the end of this process that lawmakers work through? And then I'm going to tack on another question to that. What's one thing that you're just excited for being at Tax Foundation for this round of tax reform?
So that's a great question. Both parts of the question. So Kyle already said it earlier. Full expensing. This is where we always come back. The treatment of new investment is really critical to get right, and not only doing what was done in 2017, where things like machinery or assets that don't necessarily have a really extended lifespan are able to be deductive. Costs for those are deducted immediately, but making sure that the treatment for research and development gets returned to immediate expensing, and also things like structures. If we're talking about making the U.S. a competitive place for investment, and a competitive place for manufacturing, manufacturing is more than just the machinery on the floor. It's the facility. It's all the integral features to the facility, and making sure that you have better treatment for those investments alongside the things that are more short-lived in their useful lives. And that gets into kind of what does excite me. We are an educational organization. The opportunity that we have in a year like this to explain how these different policies work together and how they impact ordinary Americans or different businesses, different industries. It's a really cool opportunity to be able to have to be past the mic and say, well, this year we're mostly talking about Tax Foundation's core issue, tax reform and opportunity for pro-growth policy. And to do that both with lawmakers and the public and different forums, it's really exciting to be able to have the focus on an area where people, certainly they care about tax policy when it comes to, filing their taxes. But in a year like this year, every day is going to be an opportunity to educate the public a little bit more on how tax policy works and what the risks are for getting it wrong.
I'll follow this up by saying something that I feel like is a little bit not talked about enough in our current time right now and it's one of our core tenets here, and I mentioned it earlier, simplicity. I feel like that's such a bipartisan concept, and it's obviously one of our core tenets at Tax Foundation. I haven't met anyone that wants more complex taxes. That crosses every spectrum, every boundary, and I think there are maybe some opportunities this year for taxes to get simpler, and I would love to see that. I think everyone would like that, and I feel like that's something that we talk about, and it's just almost not talked about enough, in my opinion.
Well, honestly, Kyle, there's a little bit of cognitive dissonance on this issue where people say they want simplicity, but then they also say, I want this tax preference for this and this tax preference for this other thing. And, by the way, it'd be really nice if I had a deduction for that expense. And that is, you're absolutely right. Nobody's out there saying explicitly, I want a more complex tax code. But in these negotiations, what we're seeing is essentially that trade-off between, well, there's some things that certain industries or individuals are eligible for. Are we going to spend more time designing, rules for tipped workers or overtime workers or folks in high tax states or folks who are investing in certain green energy type things? Or are we going to have a tax system that is truly simpler? And there's a lot of give and take, and I think challenging politics there, even though we know kind of what the policy direction should be.
And I will, honestly, real quick, I am going to call out my brother because him and I were just having a conversation about this. My brother, Ryan, I love you, Ryan. But he was just talking to me. He was like, oh my God, he does a lot of overtime in his job. He was like, oh my God, no taxes on overtime. That would be incredible. But then he was talking about, tax filing season that's coming up and him owning a home and how complicated and annoying that's going to be. And it's like, you can't have everything. We can have simplicity. You can have some of these things, but you can't have everything. It's just not possible. So sorry, Ryan, but I just had to call you out because I was just having this conversation.
Yeah. And Ron is just like millions of other Americans who think the same way, who think, oh, it would be excellent if we had a tax provision that would help me in this way. But that comes out of trade-off of like the complexity and what records you might have to keep in order to be eligible for that thing.
Exactly. So it's a complicated situation, but hopefully here we're going to be moving forward with all of our plans, simplicity, we have full expensing, all of these things are, and we're ready to go with that. But Daniel, we're wrapping up the show here. I want to know, is there anything else that you want to plug that's coming up for you?
Yeah, so one of the things that I'm working on, and Tax Foundation does a lot of stuff, but we opened an office in Europe last year. And I have the opportunity to speak in Athens in February, and I've been thinking through like different connecting points with the policies that we've been able to see success for here in the U.S. So just thinking through the different types of jurisdictions and opportunities for pro-growth tax policy, whether that's here in the U.S. Or around the world. And also, one of the little hobbies that I have here at Tax Foundation is working on global minimum tax stuff. So there's an article I'm working on related to that as well. So a couple of things, not necessarily, the U.S. debate is critical this year, but we've got a big footprint around the world and opportunities for educating all kinds of places.
Daniel, thank you for being on the show today. And for Erica and myself, I just want to say before we sign off, if you have any burning questions on taxes, you can send them our way. You can find Erica and Daniel both on Twitter or X, whatever you feel like calling it. And you can reach us via email at podcast@taxfoundation.org, or you can slide into our DMs at deductionpod on Twitter. Thank you for listening.